Hello and welcome back to the channel. Thanks for tuning in. This past week has been absolutely nuts. The markets have fallen over 20% in the past couple weeks, and we're almost officially into bear market territory. Now, I wrote this video yesterday, but when I woke up this morning, the markets crashed again, just like last week. Futures were down over 5% overnight. That was shut down immediately. Pre-market trading was down about 7%. When the market opened, S&P instant drop. Circuit breakers were put on within the first 10 minutes of trading. Second time now in the past week or so. So things are really starting to hit the fan. Or is it? Other events going on in the world. Record low oil prices, all out price war between OPEC and Russia. Don't know when that's going to end. Yesterday, just announced schools are closing down, colleges, public schools around the US banning travel from Europe, flight cancellations all across the board for pretty much every major airline. And we have other sporting events. NBA canceled its season. NCAA March Madness will be played without any fans. And this is just the start of it. If things don't get better, who knows what the Olympics are going to look like. Baseball season, football season, down in the year. Let's not get too far ahead of ourselves though. But that's just a couple crazy things that have happened just in a matter of days and weeks. Exciting times, y'all. But you're here to find out how to make money. That's correct. Now, before we get ahead of ourselves and think about all that money we're going to be sitting on, want to make this very clear. Please, please, please be responsible with your investing, any sort of gambling, risky trades that you want to do. These are very volatile times. No one can tell you exactly what's going to happen. If they are, they're lying. Don't listen to them. Do your research, read up on trusted sources, your own intuition, and most importantly, only lose what you can afford. Make sure that you have a stable income, you're thinking about your income, you have an emergency fund, and if you don't already, work towards that first before anything else. Stop this video here. Make sure you have that emergency fund, 3 to 6 months of expenses, living expenses, rent, food, other things set aside just in case things turn south from here. And also I want you to consider the industry you're in, your job security. I know the past couple weeks have been rough for a lot of industries. They've been really hard hit. We don't know when this is going to end. This could just be the start of it, but companies, especially in the travel hospitality industry, have started asking workers to either take unpaid leave or mass layoffs are planned. Other industries, less affected, they're asking employees to work from home, work remotely. But if any of these industries are hard hit, you're in it, please take a moment to consider your own job security. And if you can afford to make risky investments, now might not be the greatest time.
And last thing before we start the video, I'm not your financial advisor. I don't know your personal situation. Before you do anything drastic, please consult with your financial advisor, someone who knows your specific situation the best. They know how to help you out.
And also, please just don't take random investing advice off of YouTube videos, random online articles, websites. I've mentioned this before. We'll mention this again. Do your own research. You can use online sources to help you, but please don't just blindly follow what other people are telling you. They might have ulterior motives, might be trying to pump something, dump it, you're not in the know. Scary times. This video is for purely entertainment purposes. With that said, let's begin. So if you've been watching a lot of finance and just other videos in general on YouTube, you've probably seen a lot of people shy away from talking about the coronavirus, the pandemic, because fears of getting demonetized. But here on my channel, I'm not getting paid by YouTube. I have no viewers, have no subscribers, so I can say whatever I want. The coronavirus is real, and it's having a very large material impact on the world economy, especially the stock markets, industries. It's here. Don't know how long it's staying, but it is here. The coronavirus is here. Virus first spread from China late last year, early this year. Going back to the markets, we see the term priced in a lot, just thrown around when people talk about stocks or just market conditions in general. What is priced in? Is it priced in? From the huge losses that we've seen in the past month, to some extent, yes, it is priced in. We all know that these industries are getting hit hard. The market knows and it's reacting accordingly. But how much will it fall? How much of this is actually priced in future events that we don't anticipate on happening, such as event cancellations, Disneyland closing its parks? Are these future unforeseen events priced in? We don't know. But I do anticipate that there will be effects as a result of those events. Now, do keep in mind that to this point, the federal government in the US and the central bank haven't done much in terms of stimulating or trying to boost the economy. There have been the Fed rate cuts last week. Fed repo operations have expanded greatly, overnight borrowing and lending. But I'm pretty confident and certain that there will be more done to help stimulate the economy, whether it be the proposed income tax cuts, delay on your tax filing, whether or not we'll see a stimulus package for those hard-hit industries. We don't know what exactly is coming out yet, but there could be measures taken by the federal government and central banks, not just in the US, but around the world, to try to stop the bleeding, try to reverse the course, especially if the virus begins to slow down and we see the end of the tunnel, the light at the end of the tunnel soon. And whether these measures will be effective or not, obviously, are to be seen. We saw with the Fed rate cut in the US last week, not much happened on that day. The markets went way up once it was announced and then back down again, and we've been going down ever since. So whether or not these measures will be effective, we don't know. This brings me to my first point of how to make money during these crazy times. Buying stocks? Question mark. I say this with the question mark because we all know the phrase buy low, sell high. The market's going down. We're seeing lows, but how low will it go? Is this a good time to buy? Will it go lower? We don't know. No one can tell you for sure. But what I can say is certain strategies that you can use to help you take advantage of these drops and to make some money on the rebound if it does. We'll get into that later. But dollar cost averaging, you probably heard of this a million times. Set aside some money. Let's say you have $1,000. You buy in this stock. It's at $200. You buy two, it drops to $100. You buy five more, it drops to $50. You get some more. Use that money. You're averaging down so that if you're buying up here, it goes up, sure, you're fine. You're buying here, it goes down, you're getting some more, it goes down, you're getting some more, it goes up. This is all assuming it does go up. I do want to touch upon that point real quick. We all kind of have this assumption that stocks will go up. It's just temporary, it's going to dip and go up. But make no mistake, stocks are not guaranteed to go back up. They're not. No company is guaranteed to rebound on the way up if and when the recovery happens. If this economic conditions get really bad, we could see companies go under and completely bankrupt. Given if they had bad financials before this, when stocks were at an all-time high, they had bad financials. This is just going to make that worse. They're shutting down operations, can't pay the bills. There might not be a next year. So please keep that in mind. Do your due diligence, do your research. Stronger companies, traditional blue chip tier companies should be safe. We don't know, can't tell for sure. But don't make risky investments. Think something's gone absolutely low, can't go lower again. It very well could go down to zero. Now, on the other hand, you might be thinking, well, governments could step in and bail these companies out. It has happened in the past, but it's very hard to tell what companies exactly the government is looking at. You can make some educated guesses, but once again, there is no guarantee that any sort of bailout is coming. Another thing that I want to touch upon about stocks is that this will be a longer term strategy. If we assume that the market will begin to recover 5-6 months from now, towards the end of 2020, they won't go back up to where you would want them to be, at least in the next half year to the year out. The recovery process, it may be faster than the past, it could be slower, we don't know. So if you're looking to make some money tomorrow, this probably won't be the best strategy for you. So don't panic if you're not seeing crazy amounts of gains next month. Things could very well be going down for the foreseeable future, but the recovery, you won't see those profits until 6 months, a year, 2 years from now, if any. The second topic we can touch upon today is retirement contributions. A lot of you are probably feeling the pain from the markets, your retirements 10, 20% down. It's all red, all terrible. But if we're thinking about this in terms of stocks, if people are saying buy low, this is a good time to buy stocks, same thing goes with your retirement accounts as well. Given that you're not close to retirement, you don't need this money for the next 10 to 20, 30 years from now. If stocks are at an all-time low, your retirement accounts are also buying into equity, securities, bonds, stocks, things like that. So if you do have some extra money, you're increasing those contributions now, you're essentially buying into these things, pretty much stocks and funds, the market now when it's low. 20 years, we're hoping that it's going to be a lot higher than where we are today. If you don't want to get down and dirty with this market, trading, buying stocks, other things, you have some extra money, you have that emergency fund, you've looked at your job security, this might actually help you out for retirement in the long run, given that you're not retiring in the near future. Now, the third thing we probably all knew is coming: risky speculation, options, short selling, all that good stuff or bad stuff. This could be a way, if you have the extra money, you're not afraid to lose it. I equate it to gambling pretty much a little bit better. We have some idea of what's happening in the world, what's happening to the market, but it all depends on your plays, what you're doing. If you're buying puts, calls, the same thing as stocks, it could go down for another couple months or right back up next week. We don't know, so be careful. Also be mindful of expiration dates on your contracts. If you're going for the short term and the market's swinging like crazy, this week it was up and down again. Volatility, short-term volatility will kill you. If you're not buying contracts a couple weeks, couple months out, you could lose all your money even if the market does go down. For example, I lost out yesterday. SPY, talk of the town. Crash hard today. I had a contract expire yesterday. I would have been way in the money today, but yesterday that expired worthless. So think about those dates. Think about what you're buying into. Do your own research, do your own research, do your own research. The next point about options is have a plan. Set a limit where you're comfortable with those profits and sell it. You don't actually make any money until you sell these contracts or you exercise the option. So if you're just holding, you're already at 500%. You think it's going to go to 1,000. It's going to the moon. We're all getting Teslas. Could go right down to zero tomorrow. So think about what you're comfortable with. Have a goal before you start. And this way, you'll at least be able to make something as opposed to nothing. Get rich quick schemes always sound great. Seeing other people make thousands of dollars looks great. But at the end of the day, a lot of it relies on luck. When you're getting in, when you're selling. So protect yourself, protect your investment by making sure you're getting at least some of that. And if you have crazy gains, you sell off some, set aside some of it. Don't touch that. That's your money to keep. You could reinvest, play with the rest of the money, lose it all, it doesn't matter, you still have some. The point of all of this, right, the title of the video, to make money. If you're making money and then losing it all, you're not making any money. Set some aside for yourself. Pay yourself first before you hand it over to someone else. Also, do some of your own research. Don't just blindly follow what other people are saying. Offhand comments, XYZ, ticker, expiration date, strike price. Do a little digging. Look into it yourself. Some industries that I think will be affected: tourism, hospitality, travel, hotels, airlines, travel brokers, travel agencies have all been hit really hard. As I said earlier in the video, they've dropped crazy in the past couple weeks. So now might not be the best time, but there also could be more room on the down and down. Oil companies, energy companies, the price war has further exacerbated this whole market. Entertainment, movies, concerts, entertainment companies, theme parks. Disney's closing next week. Could be priced in, might not be. Just something to consider. But in general, everything's going down. Retail, the supply chain will take at least a couple months to kick back up. Inventory to start flowing in again. And a crazy drop in consumer confidence will just hurt these retail customers even more as people start to panic, don't want to shop, just want to stay indoors, might not be comfortable traveling, shopping for the next couple months. But you also want to keep in mind effects of the government and other outside entities, the effect that they can have on the market. If we're going to see huge stimulus packages, bailouts, things that would affect the market, try to cut losses soon, it might not fall as far as you think it will fall because we haven't really seen crazy drastic action yet. That's the key word, yet. I do predict some of the things I've mentioned could happen. The government will probably most likely intervene in some way, and we also don't know the effects. But keep this in mind as you think about the types of investing that you are doing if you're betting on the market to continue to go down. Last thing about stocks and option plays, consider hedging your position. So if you think buying stocks going down, maybe get some call options. If it does go up, protect yourself there. If you're just trading options, very risky. Spreads, buy some going the other way just in case so you're covered. This will minimize your profits a little, but also ensure that you're not losing everything. Be smart about these. And the last thing I want to talk about today, refinancing. With the interest rate cuts last week and speculation that they could be cut again, interest rates are going down, down, down. Very low, lowest they've been in recent memory. Depending on where you are, you could also save a lot of money, make a lot of money by refinancing your loans as the rates fall and may continue to fall. With the recent decrease in interest rates, we've seen about an 80% increase in refinances. So if this is something that applies to you, consider it, look into your financials, speak with your bank, shop around a little. This could be a great way to save some money. That's all I have for you today. We talked about a couple things. Be safe out there. Consider your position, your emergency fund, your job security, what you're willing to lose. And I've given you some things to think about that you could use to position yourself well to either make some money here, today, next week, or to put yourself in a position to succeed into retirement 20, 30 years from now. If you enjoyed the video, please give this a like, stay subscribed. If you have any comments, ideas, suggestions, leave them down in the comment box below. But thank you for taking your time watching this video. Peace out.